Hey there, random internet strangers. It's Random Crypto Guy here with our weekly dollar cost averaging beast mode signal. Today is April 25th, 2021, Sunday. It's 7 o'clock. If there is some major changes, I will do an updated one at after 5 p.m. That's New York time, Eastern Standard Time. But I don't usually nothing major happens on Sundays before 5 o'clock, so I don't expect it to be any more than what it is right now. If you are interested in following dollar cost averaging, and what this does is it lowers the average of your dollar cost averaging through putting money aside to buy the dips, setting it aside in escrow to buy the dips. And you will find these every Sunday at on Twitter at Random Crypto Guy, at Forex Random, or Forex_random. I know it's a terrible name. I used to be in Forex before I switched over to crypto in 2019. I've been trading since 2008. That's when I got my start in Forex, and then I made the switch to crypto in 2019 and never looked back. So, without much ado, like I said, you can find me. These signals will be in the pinned tweet every Sunday. I do a morning one, and then if there is a major shift in the market in the afternoon, I will do an updated version. If not, the morning is just fine. So, and you'll find it at the pinned tweet on Twitter. So let's move on. Let's go to, where are we going? To the calculator. Let's get right to the numbers. The signal this week is we actually have a small buy the dip signal. So, and I will explain how to do that. But the numbers are the DCA is 96.6. That means you are going to take your dollar cost average, whatever amount it is. In our examples, we always use $100 because it makes the math easy. And we are going to buy 96.6% of the $100. We're going to purchase Bitcoin with 96.6%. So what you do, whatever your dollar cost average is, in our example, it's 100. So 100 times 96.6% equals $96.60. Now that number will be different if, like, say your dollar cost average is 200 or 150 or something like that. I'm always use 100 just to make the math easy and that you remember the numbers very easy. So we will purchase $96.6 in Bitcoin with our fiat. And if you're using BlockFi, you would use GUSD once you transferred your money over, and I'll have a subtweet below this tweet to explain how to do that. And then, so we set that aside. So let's set that aside. The all-in signal. This is an escrow account that you're going to set in for when prices are going to get super cheap in a bear market. That's what the all-in signal. So we set aside a little bit every week. Just to and then it'll fluctuate depending on what price is doing. So this week's signal is 3.4%. So we're going to take our dollar cost average, which is 100, or whatever your dollar cost average is, 150, 250, $20, whatever it might be. So you're going to take that, your dollar cost average, times 3.5%, and that equals $3.04. So $3.04 will remain, if you're using BlockFi, that will remain in your GUSD. You keep that money, and that's going to set aside every week. It'll fluctuate anywhere between 0.1% and 10% plus, depending on what price is doing. and we're just gonna, it's a little bit of money that we're gonna set aside every week until the price drops so dramatically that it's a fire sale, and it's the biggest bargain that you're gonna find, and on average about every 2 years, about every year and a half to 2 years, you'll buy this signal, the all-in signal. So because we buy the dip signal, we're not going to put in any money into the BTFD fund. We're actually going to take money out and purchase Bitcoin with it. It's not a lot, this signal. It's only 1%. That's the signal, the BTFD. So we're not putting any aside into the BTFD. We're going to take it out of the BTFD. So in this example, I'm going to do it a little differently when we're taking out, because we should have if you've been doing this for a while, you should have a nice chunk of change in your BTFD escrow. And if you're using BlockFi, that'll be the USDC account that you were putting the BTFD money into. So now you're going to take it out and purchase Bitcoin with it, but it's only 1%. So for example, we're going to use $1,000. We've set aside $1,000 through all our, every week we've been setting aside money in the BTFD fund. Now we're going to take it out, but we're only going to take out 1% of that. So we take 1,000. We're assuming we have 1,000. It might be 2,860. I don't know what you're set aside, but everybody's going to be different. So 1,000 times 1% equals $10. So we're going to take $10 out of our BTFD fund and purchase Bitcoin with that. So whatever that number amounts to. So you see, we're adding more Bitcoin instead of subtracting out. So those are the signals. As I said, 96.6% of your DCA will buy Bitcoin. 3.4% goes into your all-in escrow, and then 1% comes out of your BTFD escrow and goes into Bitcoin. Okay, so you're just taking it out of escrow and buying Bitcoin with it, 1%. So I hope I made that clear. I will, in the tweet, I will try to clarify it as much as I can. So moving on. Let's go to the charts real quick. We're going to look at what's been happening this week. And you can see we've been in a down. This is the daily chart of Bitcoin. And you can see we've been in a daily downtrend. Lots of Heikin-Ashi red candles. So, but we're starting to see some selling pressure or buying pressure right here. So you see the rising wicks, rising bottoms. That is a good indicator that we're starting to get more buyers to enter the market. And we have a lot of stacked demand here. Now I've added a 1 hour demand because that's what a lot of the scalpers are using, is the 1 hour time frame, especially on weekends. So I wanted to take a look at that. And so the ones that are marked with price marks, those are 4 hour demand zones, and then the solid blocks are 1 hour demand zones without price marks. So there's a lot of stacked demand here. And then we got further demand. I talked about it in a tweet down here at 45. Around 45 is the next possible level. So that's why I said 45's in the cards, because this demand zone here, this big daily demand zone, and then there's not a lot. It's not that strong because there's not a lot of nested demand here, but we have a lot of stacked demand here, so that's good. We're starting to see the demand start to stack up, and you can see, if we expand out a little bit, it's a very similar signature as what we had over here in this area. Was it this one or was it previous? Let's back it out a little bit. Down in here, yeah, this area, the tail end of this downtrend, you can see the wicks. It's a very similar signature here, but one of the reasons why we're only taking 1% out of our buy the dip escrow is right here. I wanted to show you this. It's easier to see on TradingView because I can use segments. If you've been following me, you know that I look at only the slope of trend lines. I don't care about whether it's going to bounce off the trend line or not. That's just silly nonsense talk. All I care about is the slope from high to high. And as you can see, this slope is slowly curling over. It's getting less and less. So what's that telling me? That's telling me that the selling pressure is increasing. That it's pushing it down. You think of selling pressure coming down, that's pushing down, and if you're using indicators, you would call this divergence or a slowing of momentum, where the indicator is going down but the price is still going up. I call it a not so higher high. So, and then we're having on the bottom the buying pressure. This is pushing the price up when you buy. So you can see that that is curled over. We have officially a lower low on the daily. So we've gone to a higher low, a not so higher low, to a lower low. So there is some definite curling over of price action. Now, does that mean that it's going to just topple over and drop back down to 3,000? No, but it definitely puts 45,000 into the cards. That's why we don't want to go all in with our buy the dip escrow. We don't exactly know for certain that it's going to go higher from here. Because prices don't always go up, and we're dealing in relative terms. You can see that the candles have got increasingly bigger and more volatile over from here, from way back here. And let's look at this was the dump. This was the election dump right here. This little tiny candle here, when everybody was freaking out when it dumped here, and now we're just like ho hum. And look at the size of these dumps. See the relative size compared to what it was doing over here. So you can see that the volatility has just been massive. So we don't know exactly. I suspect that we're going to go up a little bit, maybe back up to around 56 in this order block here. We got this base drop, so right in here is an order block in a drop base drop. So this is going to be a resistance area. My indicators don't pick up those very well, but they do pick up the demand and supply zones, but just not the order blocks in between. So I gotta search those out a little bit. So I suspect over the next couple days we might get up in around 54, 55, maybe even 56. But then once it breaks through, then we're probably going to be off to the races again, at least until we get up into supply here. And then maybe it'll just bounce around here, but we got to break this. This would also be known as a pivot. A lot of circles. It depends on the school that you came from, what this area is called. Often it's called a pivot, order block. There's 100 different names for it. But this little signature here, you got 3 rising bottoms. That's a good sign that we are grinding out a bottom here, possibly. It's not definitely. It's just that the odds are turning in our favor. We got a long retrace here of a lot of high and icy candles, and prices don't go down in a straight line any more than they go up in a straight line. So let's hope over the next week or so that as we're hoping, because we're hodlers, that we want the price to go up, that we go at least up into around 56 range, and then we'll assess there when we hit that pivot. So, but if it does go down, then we're prepared next week to take more out of our Buy the Dip fund. So that's all I have today. Thanks for watching, and as always, it's free. I just please ask that you, if you decide to do this, get off zero, start at $20 a week, and get yourself set up with a BlockFi account. It's the easiest and simplest way, I believe, for noobs to really get off zero. I think we should start. I'm going to start a hashtag with that, get off zero, and buy some Bitcoin, even if it's just $20 a week, and we'll go from there. And thanks for watching.